Thanks, Andrew. It's my first visit to the REIT Corporate Conference here in the Gold Coast. It's a real opportunity to meet the shareholders that have been welded on, as my chairman says. Unlike some fund managers suffering from attention deficit, these shareholders are loyal and they'll be with us on the journey, Tony. So pay your respect, and I am today. And my team and I are committed to continuing to create wealth for you. I do have a story today to tell. I will pause on one particular slide given the recent publicity that the supply and demand area has had in lithium, and I'd like to tell you our perspective on that, but also give you an overall view of how we're progressing very quickly from explorer into developer, starting construction, and then ultimately being a world-class operator. There are some investment highlights. The key one for us, there's a number there, but the ESG element, having credentials that are rock solid and that the market believes is more than just ESG on a PowerPoint. Real targets with real endeavour. And we'll show you a slide on that in my presentation. To talk about Tier 1 asset, I've worked most of my career, as my chairman says, in the big end of town. I've had the luxury of working in Tier 1 assets. I know what Tier 1 assets are. They've got scale, they've got quality, and they're well positioned on the cost curve because this is a cyclical business. I can't speak for the gold players, but the rest of us do have cycles, right? And we need to be robust and go through these cycles. And a Tier 1 asset sees you through. We've been very deliberate around our offtake strategy. We learnt from the mistakes of the first generation lithium producers, the quality of your counterparty is crucial. And where they sit on the value chain is also crucial. And we're fortunate enough to secure both LG and Tesla. And we've got one more offtake to put away, and we're deep in discussions, and I'll elaborate a little bit further. We believe we've got this project timed to perfection. And as I said, I'm going to spend a bit of time on the supply and demand and talk through that. We have a very experienced leadership team, starting at the board. I'm fortunate enough to have a resource that I can build and then develop on the back of some excellent exploration activity done by David Richards and Jamie Day, so I stand on their shoulders in developing this Kathleen Valley asset. But we've also got many other quality individuals in our team. We're well capitalised. We did a significant equity raise in December last year, 450 million, and we've got 466 in the bank. And on the back of that money, we've ordered our long lead items. We're trying to de-risk the project by putting ourselves in those production slots and starting to order the very important equipment such as the SAG mill. This is quickly a corporate overview. There's 2 points I want to make on this slide. Firstly, we're more than just a single asset operation. We do have our Boldania asset. This is a very strategic resource for us. We're going to continue to drill this particular asset. We're doing some drilling at Kathleen Valley and we'll move to Boldania later in the year. But we're very excited about what we've got here. This will form future strategic mineral inventory on the back of our downstream refinery aspirations. The other point I want to make is the board and the leadership in combination own 18% of this company. Our interests are completely aligned with the people in this room. We've got genuine skin in the game. We have a strategy. It starts with Kathleen Valley, and we need to build Kathleen Valley out to its full potential, which means drilling it out, understanding the size of the resource, and then growing it responsibly. The second limb of the strategy is the downstream. We've done our scoping study. The economics are compelling, and we believe, right as we stand today, it is the value maximising pathway for Liontown. And then the third horizon in the strategy is Liontown to its full potential. So as I mentioned, Boldania and potentially other assets, given we believe we've got genuine IP in the way we discover lithium deposits, pegmatites that actually have spodumene. Supply and demand. I've had numerous approaches at the booth from keen investors asking me what did I think about the recent research reports that were issued by Goldman's and Credit Suisse. And what I reflect on is, I remember an old boss of mine used to say, Tony, don't create science in the absence of fact. Right? And I've seen the supply and demand models on these particular research houses. They're pinning a lot of hope on Chinese production and African production. Chinese production grounded in lepidolites of 0.3%, and these African projects owned by private holders of green bushes type quality. Very difficult to find where they are. But I know those tonnes are hard tonnes. Those of us that have run businesses in Africa, this is not a gold where you fly the bullion out. This is a bulk logistics business. You've got to truck the product out, or barge it, or rail it out. The other point that I want to deal with the facts is every day my team and I are meeting with customers. Customers that are prepared to sign billions of dollars in take-or-pay contracts. We see their posture. We've got a third offtake that we're negotiating at the moment. I can see their eyes across the virtual table because I have to do all these things by Teams. They don't wave the Goldman Sachs report at me. If I'm an EV executive sitting in a boardroom in Detroit, sitting in the boardroom in Munich, or sitting in the boardroom in San Francisco, and I'm banking my EV strategy on long-term, reliable supply, they'll look to Australia. They'll look at ESG, and they'll look at governing law. So that's my position on the supply and demand. Now, our house view is we support, this is a BCG analysis, and it shows you a high case and then, sorry, the base case and then the low case in demand, but the deficit prevails. And if you look at chemistries, the various battery chemistries, we are there in terms of lithium. We have a presence in all these chemistries. And if solid-state batteries prevail, then we've got a presence there. So in the foreseeable future, I cannot see us being substituted out. ESG. Similar to Bellevue, we are going to install day one a significant renewable farm. Close to 70% of our power will be renewable. And we are clearly a point of attraction for the customers that we're dealing with, the Tier 1 customers. But what I also want to emphasise is the S. We're the only mining company since Juukan Gorge to have signed a native title agreement with the Tjiwarl people. We're very proud of that achievement. And on the back of that native title agreement, on November 17th last year, we've now secured our Section 18 from the government. The remaining permits are in train, and we're hoping getting our final permits at the back end of July, but we're going to get an interim permit to start construction in July of our camp. So we're very proud of the ESG. The final bit, the G, now we've already issued our first sustainability report. We're only yesterday an explorer. Today we're a developer, and we're putting our credentials on the table to be scrutinised by all the various index, Sustainalytics, these people that continually scour your internet site looking for the right words with their bots. We want to be ahead of this. As I said, we don't want to do ESG on PowerPoint. We want to be real. The resource, and it starts with this. For me, as I said, I was blessed to walk into the company with an asset of this quality. It's 450 metres deep. Tonnes per vertical metre range between 200,000 to 400,000. It's open. We're drilling at the moment. We've got rigs out there, and we're going to try and establish the extent of this ore body. As I said, Kathleen Valley to its full potential. We'll be mining this using traditional mining methods. Predominantly, the ore body will be mined using long hole open stoping. There will be a small percentage of the ore body that will be mined using room and pillar. We've done a lot of work on the geotech, we've done a lot of work on understanding our cost profile. We issued tenders as part of our DFS, not based on just some volumes and rates. We did detailed schedules and issued them to 5 independent mining contractors, and we'll be out in the foreseeable future getting and awarding the contract. So we're very confident, and we've had that much due diligence done on it, and the banks have been reviewing the project as part of the funding, and so they're pouring their eyes over it with their technical experts. The processing strategy, again, grounded in substantial amount of test work. The team's done an enormous amount of work on the flotation circuit, the whole of ore flotation, currently being used by Wodgina for MRL, it's commensurate with our mineralogy of our deposit. It's very conducive to good flotation. And the plant's simple. When it's simple, it's easy to run and easy to maintain. We're sitting at the moment, we're very proud of this slide. What we say is what we want to deliver. We've done our native title agreement, we've raised the money, we've signed 2 offtakes, we've got a 3rd on the way. This is all coming down to targeting our final investment decision by the end of this financial year. We'll conclude our offtake discussions, we'll conclude hopefully our funding discussions and the remaining permitting, and then we walk into construction. First production in the second half of 2024, 1st of July. The other point I make on the supply and demand, just to touch on there, in my view, if you're not turning soil by July or August this year, the chances of you being in production in 23 or in 2024 is very unlikely. Supply will be harder to bring on than people are envisaging. Here's some views of the plant that we're building, very traditional plant. The offtake strategy, as I said, we've secured 2 Tier 1 customers in Tesla and LG. I mean, LG, everyone gets focused on Tesla, but LG, the biggest battery producer in the Western world, almost 100 billion in market cap, and the Koreans are fantastic customers, fantastic. Having my experience in iron ore, they're welded on. I do want to touch briefly on the downstream strategy. The selection of customers, again, was given a lot of thought. We wanted customers that would give us that early indication from the market if the technology is changing. But we wanted customers that could move from spodumene into chemical quite easily and transition into a new contract. And we've got that with both Tesla and LG. But you can see once we move out of spodumene, in 2029 we'll be producing not only spodumene, but our first chemical production from train 1 of our downstream processing facility. A facility that we can fund from internal cash flow. We also acknowledge that Perth is building quite an experience base of this refinery technology, with 3 refineries being built at the moment. But we also acknowledge that we probably want to bring in a strategic partner that understands this. And at the right time, we'll start this negotiation. But at the moment, the focus is Kathleen Valley. Finally, we believe we've got a Tier 1 asset and the criteria underpins that. We believe we've timed our production to meet a significant deficit in supply. I've spoken about our ESG credentials, something we're very committed to across the board. And finally, you cannot understate the strategic value of being an integrated supplier of battery materials. Not only owning your raw materials, but having the refinery option. And you can only do that if you've got a resource of this size that has a 25+ year mine life. Thank you.